Good evening, guys. K230 Capital Nightly Strategy Podcast for May 18th, 2021. Had some interesting news today in my collaboration with Professor Angus Fletcher from Ohio State. The creativity research project that we're working on for the military college has gotten the attention of Malcolm Gladwell, who's very interested in what we're doing. So there could be some collaboration with him in the future. This thing is beginning to snowball into something very interesting. Yeah, we haven't done anything on it yet, but I did some back of the envelope estimating the potential value to Department of Defense, and the minimum I put it at was at a $30 billion return on investment on the low end, and up to an infinite return on the high end, on the basis of being able to improve creativity across the force by a small factor of 10%. It has extraordinary implications, so that could become an increasingly large part of my life here in the near term. The Chinese just published a report on Professor Fletcher's work on creativity, so it has come to their attention too. Interesting times. All right, let's see what we got today. All right, so yesterday was kind of a doji day in the middle of the dragon. And it was also in the middle of the river, so it doesn't get any more centrally located than that. And then today was a fractional gap up, and then a disappointing move down to go below the lower skin of a declining dragon. The RL10 crossed back over the baby dragon. That's a signal for shorting on the intraday. And the intraday short allowed for carrying over a short position as a short swing trade in the broad indexes. And then that should be reinforced intraday tomorrow at the first sign of weakness. We're at the 2.5% sell-off from the swing high. And we're very near to falling out of the river at 411. And if that breaks, then the 30-day low, which is also the 10-day low down here at 404, is still in play, and that's another 2% sell-off from this location. From about 412 down to 404 is minus $8. That's about a minus 2% move. And then if that breaks, then it's Katie bar the door to the downside, because that would be beyond Z2 and pushing Z3. So that would be a decisive loss. Could it move that far in one day? Well, let's just look at recent history. There's a down day. That's how far it moved in one day. Could it move that far? Yes, it could. It could move that far in one day tomorrow, and that's even without a gap. So the downside is clearly in play. The RL10 is declining, as I stated. We also have the PSAR, excuse me, the PSAR continuing to move downward, pointing downward. We are below the long-term fair value, so that's more weakness. We've got two lower highs in a row and two lower closes in a row, and out of the dragon, and the RL30 slope is steepening its downward slide. So that's kind of on the negative side. On the upward side, it's 2.5% to the all-time high, and we should see some, I think we may see some channeling signals today. We'll see how that goes. The last set of channelings started from this entry down here and made that nice run, but we're already halfway up the stack and falling, so there's less follow-through to the upside on a channeling, so that's why we may not see those signals. So this is worriedly pessimistic right now. All right, let's look at the sectors. Quick survey here. So the worst performing of the U.S. broad sectors was the S&P at minus 0.86, then a cluster of weakness with the Qs, the diamonds, and the small caps between 0.68 and minus 0.76. Treasuries were the best of the U.S. indices at minus 0.26, still under the key price of 140. And then the only broad index that was in the green was emerging markets at 1.34. All right, so let's take a look at the things that were worse than the S&P. Again, S&P down 0.86. Tech and consumer discretionary, I just put in that same cluster, underwhelming at minus 0.78 and minus 0.8. Materials minus 1.1. Oil, finance, oil exploration down 1.5. Energy 2.3. Bitcoin and the broad large cap crypto minus 3.5. Underperforming companies, Coinbase down to 239. John Deere was off minus 3.6. Devon Energy 3.5. U.S. Steel and Cliff down 2.8 and 3.1. Alcoa and Cat. So that entire industrial and materials complex just getting smashed today. Apple down minus 1.1, Microsoft minus 0.86. All right, to the upside, what worked? We should ask. Yeah, so the lumber complex, wood was only down minus 0.67 and 0.53. Fangs down 0.5. Blended commodities down minus 0.48. So on a relative basis, they didn't lose as much. Then we have consumer staples and marijuana minus 3 and minus 4. Wheat and precious metals, Ethereum and blockchain down an eighth at minus 1.8. Mexico up 0.26. S&P biotech, Mexico and agriculture up 0.43 to 1.1. Japan, lithium and moonshots up 1.3 to 1.4. ARC Genomics 1.43. The VIX 1.45. That was ARC Innovation 1.43. ARC Genomics is 2%. Clean energy, second strong day in a row, 2.65. And then the companies that outperformed, Virgin Galactic 3.67, rallying from disaster. Twitter 1.1, Simon Property Group, which is the commercial real estate, 0.27. Tesla and Squarespace just eking out fractional gains. So not an impressive upside in the U.S. There were it was more of the Euros and the Asian countries doing very well. Here's a couple trades of the day that I wanted to share with you that worked, and I'm calling this the K230 setup. So what I'm doing is I'm looking at 30-minute charts. So this is PBW on a 30-minute chart with the otherwise the standard framing, and I'm looking at Kata 2s on the 30-minute charts. So let me just mark off the way that trade is actually the way it shakes out by marking up the daily moves. Yeah, so there's a day. There's a day. So what I look for here is the extreme move down around Z2 at the end of a horrible run. So that's a horrible run that ends in the winter, and then you get actually a like a supported spring crossing signal here. But what I'm really looking for on this one is the K2, the Kata 2 on 30 minutes, and that makes this morning's entry here at 75.25 really nice. And then that follows up with the next leg of momentum for a nice intraday move on the 30-minute chart from 75.50 to 78. That's $2.50, and it's only about $1 of risk to the downside. So that gives you almost 3 to 1 on reward to risk ratio. All right. Same idea expressed here on the this is the biotechs. We talked about how smashed they have been, and here's your Z3 excursion on the that's right. That's pushing the Z3 downwards. So you had a Z3 breakdown, and then it's riding it all the way down, and then you have, then you have your alert of the RL10 reversal. You have the SSC right here, and then your K2 entry is this one. Today there's a slight gap up and it takes off, and now you get an entry around 127.5 on about $1.50 of risk, so about 1% risk, and you get a move to 130.5, which is $3 on $1.20, which is about 2.5, almost 3%. So you're making 2 or 3 to 1 on just that initial burst. You're not going to lose money intraday on that one, right? So it starts off with this alert here, and you really want to see it in a harsh winter that has pushed the Z3, so at least gets beyond Z2, and then it's got the starting reversal, and you can take the SSC. That's a nice one-day move, by the way. But then consolidation, a higher low, and it starts breaking out again, and then on 30-minute charts you can make that work. Now, that can also be dialed into a 10-minute intraday chart, which trades a lot smoother than the 1-minute chart, which can, cause you a little bit of nervous tension, I suppose. Here's another one on moonshots, and it's again the same basic pattern. You have this harsh move down here that became a harsh winter into an RL10 reversal, crosses the baby dragon. It gets you the SSC right here in the PSAR flip, and then you get the K2 formation, and then the next day you get on 30-minute charts these nice breakouts. And all it's doing is basically rebounding from oversold conditions, and you're looking to get the second leg on a K230 frame. So how do you scan for those things? Oh, well, you find the ones that are in the harshest winter on daily charts, and that closed poorly and were the biggest percent sell-offs over the last 1 day and 10-day period. Where do you find that? On the daily tactical chart for the Dow and the ETF 30, or in the TC 2000 bundle. You can screen for that just easily. And so you're looking for the harshest winter, and then you're looking for evidence of retracement with an SSC, and then for this pattern, you're looking for the K2 entry, and you're using 30-minute charts because that can lead you to a very nice swing trade. For instance, here's the swing trade on the downside. It goes from 35 down to 30. So that's almost a 20% sell-off. And you got that actually in 2 days. But if you just take it as the swing and discount the anomaly, you get that in about 4 or 5 days. So that's then the retracement from that gives you this. And then if you're just looking for the short intraday move, that little pop is nice. So that's what I'm calling the K230 strategy for your dining pleasure. Okay? K230. Well, I want to take a look at some trades that were posted in the room today. Courage to the boys who posted them. Well done. So the first one, so this is Ken H. And the first one, he's got essentially an SSC. So there's the harsh sell-off, which includes the gap. RL10 reverses, crosses the VWAP, crosses the dragon, turns to spring. He gets the supported spring crossing using the bottom of the dragon on that frame as the as his risk. It moves in his favor $4, but it pretty quickly sells back, and he makes a fractional gain. He probably wanted a little more, like maybe taking the PSAR exit, but still didn't lose money on that. Then you get a narrowing in a sideways quiet channel. Then a Z3 breakout, uses $1.25 for the R. Gets a second position on that range expansion, fractional loss inside here, but nets 1.25. So if this thing had really continued to move, and there was, he was getting it at an intraday high, and so that could have very easily gone. But he gives it 10 bars to work. He gets the RLXD, and he nets 1.25. He tries the supported spring crossing. It works in his favor a little bit, but then he takes the scratch. So I think very well managed, and you got what you could get out of a symbol that was horribly crushed all day, and he still makes money on the long side. Here's Virgin Galactic, and so here is kind of the fake one go-to. There was a SSC available here at 16.5. He waits for the Z3 excursion at 16.85 with a 20-cent risk to the bottom of the essentially bottom of the dragon. Second position, it's in the money for 3 or 4 bars. Then he takes the exit at the spine for 1.5, takes the immediate stop and reverse on, or actually I should say a continuation SSC. Gets a second position after a Kata 2 and a Z3 expansion. Has to take the indicated exit here. Still nets 1. He was probably a little gun shy on that, so he waited a little bit longer for confirmation on the re-entry above the Z3 breakout from here instead of taking the SSC. And he still is able to cash 0.5. So he gets 0.5, 1, and 1.5. So that's 3R execution on a grinding day. This is Devon Energy. This is, I think, Matthews. Now this one is a this is a Z3 pinch breakout. I like the exit here. Maybe it could have been a few pennies tighter at the Bollinger Band mean, but that's a good exit. Now I want you to notice that is also a stop and reverse entry on a collapsing dragon that has crossed the Bollinger Band mean after a lower high. So this could very easily have been stop and reverse. And then this could have been the second position in on that short. And then your exit on this is the SSC. You cannot wait for this exit here. You need to take this SSC, which would essentially scratch the second entry or would have made this one a scratch or a fractional loss. But this is a legitimate short position here. If you wait for a Z2 breakout, that's a legitimate entry. If you wait for it to cross the fair value, that's a legitimate entry. So this is probably like, the most, in your mind, it will be the most conservative entry because you're waiting for confirmation. But when you wait for confirmation, you're giving up all of that nice move, right? So if you're short on this one, then a stop at the top of the dragon or the PSAR is fine, and then that would have paid off. This entry, this should have been an SSC entry, and then there's another Kata 2 entry over here that also would pay off. And then no need to explain that this collapsing dragon and the PSAR flip, the owl entry short, the leaving the river short, the Z3 collapse short, crossing the RL270 short. I mean, yeah, that's a pretty good collapse. That goes from, reasonable short at 26.50 down to 26.10 on what would have been about 10-cent risk. So that's a 5-to-1 on a single entry. The next one, this is on U.S. Steel. Again, this is a Z3. I don't mind this one. Z3 pinch breakout and crossing the VWAP to get long. My stop would be here at the bottom of the dragon. I think you can take this as a uh, SSC right here, or a Kata 2 with a low and then a higher low in the PSAR flip. So you can be front running this, and then we should be able to. You should be able to get out of this one on a money management stop, so it's not just a scratch. So you got paid for what was essentially an R in hand, and that turned into a scratch. I don't like that. I want to make at least dinner for two. This one, waiting again for the PSAR to cross. Collapsing dragon. You can collapsing dragon this one up here as it's leaving the river. That's a collapsing dragon against this lower entry. So you should be short here with a stop at, say, the Bollinger Band main, excuse me. Then this one pays off, and then on a money management stop, you'll end up getting paid on that one. This could have probably been a supported spring crossing entry, which should have scratched. And there could be a collapsing dragon entry here, which would pay you. Another collapsing dragon entry in here, which will pay you. So there's some opportunities on when you see these lower highs, 4 lower highs in a row. We need to be on the short side on that one, especially with today's all of the symbols in materials were getting smoked today. So we want to be on the right side of those trades. This one is in the Odysseus 1000. There's an owl entry on the long side. That's a good one. That's a great scratch. And there was just nothing to do in here until this Kata 2 entry, which there just wasn't much there all day. So you scratched on a day where there was just nothing. The only thing that was there was the collapsing dragon here, and then a second collapsing dragon here, especially here. When it violates the double bottom of those RL10s, that is a screaming short right there, and that would pay you off on this excursion all the way down. This one is I think we already, that's all. Yeah, that's all the trades. All the trades from today. So let's look at the daily reports now. Keep marking those things up. You guys are doing a good job. Here's the guidance that I gave on Matthew's request for feedback, and this is really, really important. So Matthew says, hey, I would love to get feedback on these trades today that didn't work. I submit they did work. They just didn't return. You didn't really violate any principles today. There's some tightening up that can be done. The trade didn't follow through, right? So it worked the way it was supposed to work. It just didn't pay off. Now, this is what I want to see you do on future requests for feedback. What I want you to do is what you showed me you can already do, and that is be specific now and prepare your comments in a daily AAR format about those trades. Take a look at the way you traded for planning, preparing, executing, and assessing, but specifically for those trades. What do you want to sustain and improve, and what specific action steps do you want to take? Then after you do that for yourself, I want you to take a pause, get a cool drink of water, and then think of all the times that you've heard me give feedback, like the feedback I just gave you, and then say, now I wonder what Ken is going to say about this. He's going to think about plan, prepare, execute, assess. He's going to ask me what I learned and why, and what I specifically want to do better. So if I put on his glasses, what do I think he's going to say? What's my coach going to say? So when you've done those two things, you've had 2 bites at the apple for assessment. Then wait to hear what I say about it. And then compare what I say to what you thought I would say. And then compare that to what you initially thought. You will now have 4 cycles of reflecting on those trades. Your immediate feedback, the feedback you gave yourself by thinking through my eyes, listening to me give you coaching feedback, and then synthesizing those into what you now think from all of those pieces of feedback. That's a fourth piece of feedback. And then that's the one you make your changes on. And then I want you to notice in your learning journal, how did those iterative sets of comments change the way you thought about your trades each time you did it? Because you will now you'll be thinking about these trades in a different way than when you first traded them and how you felt, than how you thought about it after your first AAR, then when you did the creative thinking about looking through my eyes, and so forth. And then if you have an accountability partner, do the same thing with them. And then you will have had 4 or 5 sets of eyeballs on these trades, and then you will be in a position to make a considered judgment about what you want to change, if anything, going forward. So that's how you make the most out of the feedback that I can give you. And you will be training yourself to give yourself feedback. You can practice giving feedback by working with your accountability partner and giving them feedback on their trades. And if somebody asks you for feedback on how they traded, the first thing you should ask them is, well, show me your markup and what you thought about that trade so I can give you comments, not just on the trade, but I can give you comments on the feedback that you gave yourself. So I know what it is that you were looking for, and then I can look for things that you were not looking at, and I can be more helpful. I actually had this conversation today when I was doing a faculty development program for my fellow faculty members in our department. I was describing a technique where we give people homework, and in groups of 4, when they come to class, we ask them to post their solution on the board. We pick one random person and put that person's solution on the board. And then for 30 minutes, the other 3 ask questions, make observations, try to improve that solution to their common problem. And in that session, there's one person that is presenting their course of action and 3 people giving feedback. So who is the training audience in that session? Correct. The answer is the 3 people giving feedback. That's who I am concentrating my observations on, because the person who's getting the feedback from those 3 is already getting 3 pieces of feedback. So I'm going to concentrate on giving feedback to the feedback givers so that they can learn the critical thinking task of giving feedback. And why? Well, because when they go back to their unit, the people on their staff who are giving them solutions have as much experience as they do right now. So they're going to be in a position where they have to evaluate those solutions and give feedback to their subordinate staff. That's actually the skill that I'm trying to teach them. So when we think about plan, prepare, execute, assess, the real genius is to focus on the assessment, to get all of the lessons learned out of the opportunity that you can. The trade frame itself is just the raw material for the learning moment if we can approach that systematically and through multiple perspectives. That's why you want to be in a mastermind. That's why you want an accountability partner. That's why you want to do lab work with a lab partner, and especially in groups of 4. Because for every trade case you get, you're going to get 4 pieces of feedback. The feedback you gave yourself, and then 3 pieces of feedback from 3 trusted others. And that is a very efficient way to improve your skill development. Bear that in mind. If 4 people within the sound of my voice want to go through a coaching workshop like that, where they are performing those group after action reviews with each other and then would like me to observe that and comment on it, I'm happy to set up a low-cost workshop for you to do that. It will be very, very low cost. It might even be free if you allow me to share that with others in workshops. So if you're interested, you're in the sound of my voice, and you got groups of 4, let me know, and we'll get that going. All right, back to the scheduled work here. Okay, so let's go to the first dashboard. We remain in bullish normal conditions. We are overbought only on the 90 and the 270 look back, and you can see the weakness that is really starting to creep in on the 30-day, 10-day, and 2-day look back, getting worse as we go. We're down to 11% above the 200-day moving average. We are losing strength on our upward trend. The ATR percentage is already back up to 1.3, 1.28. Just last week, that was at 0.78. So it has more than 50% increase in volatility. The risk index is still warning us about the weakness in the market, as is the risk Z, which is in abnormally risky conditions. No lie there. It's been telling us the truth for 10 days. No overreaction or channeling signals, so there's no automatic buy tomorrow. The strength remains in the conservative large caps like Johnson & Johnson, Merck, Walgreens, Walmart, and Morgan. Weakness in the techs like Boeing and Intel, like Tesla, AT&T. Yeah. Lots of dojis today. We have no breakouts on the 10-day NDX with the exception of Verizon. So it's still kind of inside days, inside those trading ranges. We do have a handful of channelings and overreactions, a handful by which I mean 3 and 2. We have one triple screen. We have a handful of good auto framers, really highlighted by Disney, which is a doji, a channeling, an overreaction, and 8.2 to 1 on the auto framer. So you have to go look at that screen. I guess I do too. If I said you have to, I guess I have to. So Disney, yeah, we love this. So it's finding stable support and narrowing range on an inside day. So I'm going to draw that minimum manageable risk box here. I'm ready to trade that in either direction starting tomorrow. That's going to be a really good trade tomorrow. And we're talking about $1 of risk. Boy, that's going to be good. Oh, that's going to be great. My number one priority for tomorrow is to get that one right. All right, back to the frames. Next up is the ETF tactical summary. A handful of dojis. Once more. We have one upside breakout in Mexico, which has just been crushing it. And in gold, just 4 auto framers, but including treasuries at 6.6 to 1. I still don't trust it. But emerging markets offering 2.2 to 1. And tech 2.1 to 1. That's a latent winner waiting to explode, waiting for exhaustion and disgust to set in. Lots of good names in the auto framer to choose from. And you can see the framing data that's available. I like McDonald's as well. and agriculture. I think Asia less Japan, emerging markets, and Microsoft and tech themselves also have to be strong considerations. And you can see the risks under my risk that I think are appropriate if you're doing the swing trading one day at a time. Daily squeezes is up next, just a handful. With expanding ranges and expanding volatility, it gets harder and harder to find good ones. But Disney, Treasuries, McDonald's, and gold all in pretty good shape on that one. Winter and fall beginning to dominate on the Four Seasons of MACD. No surprises there. And lots of big red on the multi-time frame NDX, but also surprisingly on the ETFs, quite a few 2-day greens in all of the internationals, which are running away from the U.S. So emerging Asia less Japan, I should say. Japan, clean energy, the U.S. anomaly, emerging markets, 263. Asia Japan blend, Latin America, and Brazil, and gold in Mexico. So the only U.S. index in there at all was clean energy, which is sort of that in the second day of its recovery, that anomaly. So let's try and take a quick look at that one. PBW is up 2.5% today. And we've talked about that one before, making its way back up the stack. It's almost ready on the daily chart for the SSC entry, and this is where that K230 idea is really strong. Look how nice this thing trades on the 30-minute. So you get the SSC entry down here. You won't lose money on that trade, and then you get the KATA2 entry here yesterday, and then if you weren't willing to hold that, you get that today when fall turns to summer, and you get an entry around 75.50, and it gets you all the way up here to 78.50 before it ever even hesitates. That's a beautiful one-day intraday trade. If you don't want that trade, send it to me. If you don't want that trade intraday with almost no risk, you just send it to me, and I will take that one every single day. K230. I'm waiting for somebody to tell me, hey, Ken, can you write those rules down? And I will say, yes, of course I can. And I can draw a flashcard. But you ought to try drawing yourself a flashcard and creating your own rules, and then see what your flashcard looks like compared to my flashcard based on just the sound of my voice. You got to learn to operationalize those ideas from others that are using standard templates, right? All right, so everything else looks normal. This is a market, however, that is really showing some concerning weakness inside here on that second leg down after a lower high. That's worrisome right there. That's worrisome. The last time we saw that was here, and it sold off sharply. And we also saw that here, sold off sharply. That was a 10% sell-off on this one. And this one was about also a 10% sell-off. So this would take it to 380 if it sold off 10%. It would take it down to about this far. So we got to be concerned about that. Okay, that's everything I got for you. We'll get this published and posted in the usual spot. Take good care. We shall see you tomorrow.